Welcome everyone to Wipro's Kodati campus. For those of us who are joining virtually, good morning, good afternoon, good evening. We will begin the press conference for Wipro's second quarter earnings. I am Nisha Chandrasekharan. I'm part of the external comms team and I'll be your moderator for today. Joining me on stage is our Chief Financial Officer, Aparna Iyer, our Chief Executive Officer and Managing Director, Srini Palya, and our Chief Human Resources Officer, Saurabh Govil. As usual, we'll begin with the opening remarks from our CEO, followed by a financial review from our CFO. Post that, we'll open the floor for your questions. With that, let me hand over to our CEO and Managing Director, Srini Palya.
Thank you, Nisha. Hello, everyone. It's good to see you again. This is my third meeting with you all. And thank you for joining me and my leadership team for our second quarter results of the financial year 2024-25. In quarter two, we met our expectations for revenue, bookings, and margins. The long-term potential of our business is strong, and we are prepared to handle the current economic uncertainties that all of us see. We continue to focus on our 5 strategic priorities and building a strong talent pool to capture AI opportunities. Now, let me go over the financial highlights for the quarter and share some insights on our markets and industry sectors. By the way, all the revenue growth numbers I share will be in constant currency. Our IT services revenue for quarter two was 2.66 billion, reflecting a sequential growth of 0.6%. This brings us closer to the upper end of our guidance. Our operating margin came in at 16.8%, which is an expansion of 35 basis points quarter on quarter and 71 basis points year on year. And in terms of total bookings, we ended the quarter at 3.6 billion, which is an increase of 8.4% quarter on quarter. Our Capco business continued to see traction, and it grew 3.2% quarter on quarter and 6.9% year on year. Now, coming to our strategic market unit performance, we saw sequential growth in 3 of the 4 markets in quarter two. Americas 1 achieved a sequential growth of 1.2%, driven by good performance in healthcare, technology, and communication sectors. Americas 2 also recorded sequential growth of 0.8%, supported by robust demand and strong execution in BFSI sector. APMEA grew by 0.3%, driven by traction in Capco. And we are seeing early signs of this business stabilizing. Europe registered a sequential decline of 0.1% due to overall weak demand and some client-specific issues in few accounts. Among industry sectors, we experienced varied performance. Let me start with Capco. With a strong account mining and traction in Capco business, BFSI continued to accelerate, delivering 2.7% sequential growth. This growth was led by Americas. And additionally, we are seeing momentum in both APMEA and Europe. This clearly marks the 3rd consecutive quarter of growth in BFSI. Technology and communications grew by 1.6% sequentially, driven by the ramp-up of a recent large deal and momentum in existing relationships. However, manufacturing remained soft for us, with a sequential decline of 2%. We are seeing good progress with our consulting-led industry solutions, specifically in the automotive manufacturing segment. And in addition, there are also signs of uptick in demand in the industrial segment. We will focus on converting this into wins to revive growth in manufacturing. Energy and utilities also remained weak with a sequential decline of 3.7%. However, we see opportunities for us in vendor consolidation on cost takeout, particularly in the energy sector. As you all remember, from the last 2 quarters, we identified 5 strategic priority areas for growth. We have advanced in all 5 areas, and I'd like to take this opportunity to share some indicators of our progress in Q2. One, we stayed focused on growing our large accounts in our 4 profitable markets and 6 priority sectors, and we will continue to invest in them for expansion and growth. In Q2, our top account grew 4% sequentially, top 5 accounts grew 6.2% sequentially, and top 10 accounts grew 3.7% sequentially, reflecting our focus on expanding our footprint and scaling our large accounts. Large deals, of course, are crucial for our growth. During the quarter, we booked 19 large deals with a TCV of 1.489 million, or which is close to 1.5 billion. This translates to a growth of 29% sequentially and 16.8% on a year-on-year basis. It's encouraging to see the diversity in our large wins across sectors. In fact, the deals we have won cover a variety of themes, from cost reduction and vendor consolidation to application modernization and cloud operations. In fact, we are leading these deals with industry and cross-industry solutions, which are consulting-led and AI-powered. Let me briefly talk about the 2 large deals that we won in Q2. One, a leading transportation and logistics company has selected Wipro to drive a business-critical SAP S/4 HANA transformation program. In fact, this win involved collaboration between all our consulting arms, Rising, Designit, and Capco. In fact, it highlights our industry knowledge and our ability to deliver customized solutions to our clients. In the second example, a software technology company has selected us to support its product development and IT operations end to end. This is a total outsourcing deal where Wipro will consolidate vendors, take over engineering, applications, infrastructure, and operations for this client. Additionally, we will implement GenAI-powered solution to solve their business challenges and deliver operational efficiencies. It's very important to highlight that one of these deals involves a new client, while the other marks our transition from having a very minimal presence to becoming a strategic partner. Now let me talk about another strategic priority, which is building talent at scale. We believe all our employees should adopt an AI mindset, have the right skill set, and use the right tool set in their work for all our clients. In previous quarters, I discussed our investments in reskilling our workforce for AI opportunities. In fact, we have now trained and certified over 44,000 employees on advanced AI. And also, we have a significant number of employees actively using AI developer tools across the company for all our clients. In addition, we are developing talent closely aligned with our clients' business needs. For this, we have established account-specific academies to upskill employees, providing a clear roadmap for building capabilities relevant to both industry and the technology context of our clients. And before I share our guidance for the next quarter, I want to thank all my colleagues for their amazing support. As an organization, we grow by listening actively to feedback from our employees. In fact, in August, we conducted our annual employee engagement survey. And in addition, I have made it a priority to connect with employees wherever I go. And we have taken specific actions based on their feedback. As most of you are aware, we implemented merit salary increase effective September 1, just 9 months after the last cycle, demonstrating our ongoing commitment to our employees. In fact, last month, we hosted a leadership summit in Bangalore, where our top 300 leaders from across the globe gathered right here to reflect on our business and chart our future direction. In fact, it was very encouraging to see that we have come together as Team Wipro, and there's a strong commitment to driving client success. I hope to harness this momentum and continue moving forward together. Now on to guidance. Our Q3 revenue is expected to be affected by seasonal furloughs and fewer working days this quarter. And as a result, we are guiding a sequential revenue growth of -2% to 0% in constant currency. Despite softness in revenue in Q3, we are confident of maintaining our margin in a narrow band. And with that, let me turn it over to Aparna for a detailed overview of our financials. Thank you very much.
Thank you, Srini. Good evening, ladies and gentlemen. Let me share a quick update on our financial performance for the quarter before we open it up for Q&A. On the IT services revenue for Q2, we deliver a sequential growth of 1.3% QOQ in reported currency terms and a growth of 0.6% in constant currency terms. This is closer to the upper end of the guidance range that we had laid out last quarter. We are pleased to share that our operating margin for the quarter was at 16.8%, an expansion of 35 basis points quarter on quarter and an expansion of 71 basis points year on year. This brings us one step closer to the band that we had laid out a few quarters ago of 17 to 17.5%. This expansion in margins was achieved on the back of operational improvements and after absorbing 1 month of salary increases for our associates that we rolled out in September. This was done within 9 months of our earlier increase. We begin Q3 with headwinds of furlough and fewer working days that Srini alluded to. Yet, we remain confident of holding our margins in a narrow band. Our net income grew 21.3% year on year on the back of higher operating profits, which grew 11.4% year on year. Our EPS at rupees 6.14 grew 6.8% sequentially. Q2 was yet another quarter of very strong cash flows. Our operating cash flows of nearly $510 million in Q2 is at 132.3% of our net income. With this, we have added cumulatively nearly $1 billion in the first half of this financial year. At the end of Q2 25, our investments and cash balance on our balance sheet stands at $6.2 billion. Let me cover some other key matrices. Our other income, net of the finance expenses, grew by 34.2% sequential. Our accounting yield of the average investments held in India was at 7.9%, and the growth in other income was also because of higher investable surplus. Our ETR for Q2 is at 24.6% versus 24% in the last quarter. Our hedges continue, versus 24% in Q4 of 24. It was 24.5% last quarter. Our hedges continue to be in line with our policy. We had about $2.8 billion of foreign exchange derivative contracts as hedges at the end of Q2. Finally, before I move to guidance, I would like to share with you that in our recently concluded board meeting, the board of directors have recommended an issue of bonus shares in the ratio of 1:1, which is subject to the shareholders' approval. Additionally, we are working through a revised capital allocation policy in line with our strategy, and hopefully we'll be able to share it with all of you the next time we meet after our January board meeting. In terms of our guidance, to reiterate what Srini had shared, we expect the revenues from our IT services business segment to be in the range of $2.607 billion to $2.660 billion. This translates to a sequential guidance of -2% to 0% in constant currency terms. With that, I turn it over to Nisha for Q&A.
Thank you, Aparna. We will begin with the question answer session. Please raise your hand and wait for the mic to be passed to you. We request that you use the mic so that you're audible to our virtual audience as well. And please do introduce yourself before you ask your questions. Would anyone like to get started? Haripriya?
Hi, Haripriya Suresh from Reuters. Couple of questions from my end. First, just to get some broad color on the segments in terms of, I know you've called out some BFSI recovery, just to get some color on where the growth is coming from. Do you see this sustaining? Is it still in cost takeout? Is discretionary coming back at all? That's my first one. Two, you've been calling out growth in Capco for the 3 quarters you've mentioned, plus one of your predecessor as well. So that's 4 quarters of calling out Capco growth, but why is that not translating into Europe numbers? Because we continue seeing that decline. I think YOY, if I'm not wrong, is about 4.5%. You mentioned a client-specific issue. Is that a scope reduction? Sort of what's the kind of change over there? And one clarification. I know there was a headcount correction. We just want to understand what the basis of that was. Yeah, thank you.
Were you able to?
Thanks, Haripriya. Check. Okay, you can hear me. Thank you, Haripriya. Let me give you a color on the growth and the discretionary spend. From our vantage point, the discretionary spend has remained constant, what it was like last quarter. Nothing much has changed. But if you look at from our perspective, and the fact that I called out that 3 out of the 4 SMUs showed a sequential growth, and of course you had a question on Europe. All I can say is that in the Americas, for us, across the industries, we are seeing momentum, okay? And that reflects in our pipeline, which is very important. And it's secular across industries, including manufacturing and energy and utilities within Americas. APMEA, you've seen that we got a growth, and I'm seeing a good pipeline there as well. And we got to obviously convert those pipeline into revenues sooner than later. Coming to Europe specifically, now if you look at Capco as a business, which is growing, it's actually earlier, typically it used to be in UK and US, but Capco now started growing in APMEA, it started growing in Latin American countries as well, which is very good because, you know, while the BFS sector globally is coming up, but Capco leading as a tip of the spear and our engagements becoming more consulting-led is a very positive one when it comes to competitive landscape. In terms of Europe, like I said, Europe, if you look at it in general, as a market, it's slowing down. And you hear that commentary across. For us specifically, in addition to that, we had a couple of accounts, I did mention last quarter too, which had an impact. And the pipeline today continues to be good there. All we need to do is focus on converting that. Thank you.
So on the headcount one, there was an error in one of our entities when we looked at it. So we have corrected it. It's a very minor thing. The trend for the headcount doesn't change, you know, what you've seen. So there is nothing major, but we wanted to call it out because there was a slight change.
Rishabh, do you want to take the next one?
Hi everyone, Rishabh here. So a couple of...
Sorry, I didn't get the name.
Rishabh from Money Control. So Srini, first one is for you. The guidance is -2 to 0. In hikers analogy, I would like to ask whether we have reached AMS or in FY26. What do you expect? On the American market side, as you pointed out, so as you pointed out that BFSI is doing well there. So is this discretionary spend that we are looking at, or what is it? On the headcount side, to Saurav, headcount decreased, attrition has increased, and utilization has decreased. So how do we read into this? Are we ready when demand comes back? Another question is on the fresher edition of the batch of 2022. Your comments on that, and another one on to Srini on the GCCs one. Your drivers have said that they are working in various sectors, as in financial services and others. So what's your take on that? Thanks.
Sure. Thanks, Rishabh. Can I go from GCC upwards? If that's okay with you. As far as GCCs are concerned, it's our strategy that we want to partner with them, clearly. And all of us know that GCC is growing quite a bit in India at this point in time, and this is very secular across industries. Our strategy and our plan is to work with these clients and help them to actually grow the GCCs for them, both on the innovation side, technology side, and also run and operate side. So clearly, that's very important for us. Now coming to BFSI segment, specifically in the context of discretionary spend, I would like to say that if it's consulting-led, Capco-led, it must be discretionary spend. So in the BFSI segment, to some extent, we are seeing that aspect coming back. But I'm not seeing that kind of a change in other sectors at this point in time. So clearly, in the US and also in across the globe for us in the BFSI segment, to some extent, consulting-led discretionary spend is actually helping. Now coming to the first question last, right, in terms of the hiker analogy for guidance. While you're hiking, there'll be ups and downs. So you got to plan your hike, accordingly based on that. One of the things that we do is run the first mile, and then last mile will be very difficult. But yes, the guidance specifically reflects what Aparna called out and I called out as well. One is number of working days is actually much more less, relatively. Second is furloughs, which typically happens for us in Q3. And third, to some extent, Europe. I think the question that you anyway asked.
So you've asked me 3 questions on utilization and freshers. So let me speak on the freshers first. So as we had called out earlier, from this fiscal, from Q1 onwards, we are onboarding freshers. We have done it in Q1, we done it in Q2, and every quarter between 2,500 to 3,000 freshers will be onboarded. Second question in the past has been asked is that about the backlog of the offers we had made. By end of this current quarter, Q3, we will make sure there's no backlog of any of the offers made. So all will be taken care of. So that's on the headcount. Headcount overall, have you seen? Small, but gradually you're seeing a positive thing over the last 2 quarters, overall net headcount. In terms of utilization, apart from what Srini called out in terms of less working days and furloughs, we are very clearly looking at gearing ourselves for future demand. And there are specific areas where we invested and hired people so that we are ready as and when demand comes. So that's the way to look at it from a utilization standpoint.
Any additional questions? So can you pass the mic to Haripriya, please?
Sorry, one more question. I know that I'm looking at your capital allocation, and I know you have a lot of cash and cash equivalent balances. And I know that you mentioned previously that you were looking at organic growth. I mean, what is that? Is that still the plan? Do you want to go for more acquisitions? What's the plan there?
So, as I shared, we will be sharing a revised capital allocation policy after our January board meeting. This will coincide with the time that we complete our strategy plan for the next 2 to 3 years. It also coincides with the time when we typically give out our dividends. For now, we've announced a bonus, an issue of bonus. To your point on M&A, yes, we have enough cash balances to pursue M&A that fits into our business strategy. We have called out that there are specific markets and specific technology areas that we remain interested in. And our preference is to do tuck-in, but we can never rule out, right? So yeah, we're actively looking, and if something fits our strategy, it will certainly be something that we will pursue. Srini?
Just to add, Haripriya, if an M&A is a strategic advantage for growth, we'll go for that.
Shilpa, you can go.
Hi, Shilpa from the Times of India. Sir, if you can help us understand, there's a lot of buzz around Gen AI. What is the conversion like from POCs to actual revenues? Can you give us some flavor around that? How many such projects are mainstreamed? And the other thing is, last time you drew an analogy as to how it's an uphill climb ahead. From a strategic priorities standpoint, if you can talk about the acceleration in your large deals pipeline, was there a reset on some of the aspects of the large deals teams that you have already incorporated? Can you give us some color on that?
Sure, Shilpa. I thought this caller mic will work, it doesn't. So Shilpa, let me answer the Gen AI question first. The way we look at it, we want to be AI-powered Wipro. And I talked about this mindset, skill set, and the tool set. Now, going to specifically to your question in terms of proof of concepts, going into production, and so on and so forth, there are three categories of AI projects that we do. One, it's AI-led projects. Two, AI-infused projects and programs. And three, AI-powered solutions. Right? So those are the three categories. AI-powered solutions are mostly industry and cross-industry led, which is pre-packaged because the whole conceptualization happens with Gen AI as a core. Okay? Now, you do AI infusion when you already have, let's say, a managed services around a process or an infrastructure or an application which has been ongoing, but you want to improve the customer experience, employee experience, productivity benefits, operational improvement, so on and so forth, then you infuse Gen AI. Right? When I say AI-led projects, for example, whether it's a software development life cycle or whether it's to do product engineering, you start thinking about how can I start working on AI, right? AI projects. It could be like the point I mentioned, AI developer tool. So these are the three categories of projects and programs that we do, Shilpa. Now what happened, and coming back to the production in terms of the number, if you ask me quarter on quarter, I keep track that metric. I don't know whether I'm ready to announce that. But all I can tell you is that significant number of POCs have gone into production. When I say that, it's both on the projects and also on the managed services, right? And how do you monetize it? It's an industry thing that's going on. But if you ask me, am I excited with Gen AI? All I can tell you is I'm more excited. That's Gen AI for you, okay? And it's moving very fast. Second part you asked is about large deals, right? If you look at our large deals this year, like I mentioned, $1.5 billion, I think highest in the last 10 quarters that we have won. And this is very secular, like I said, across markets, across industries. I think what's important in any large deal is about being first, top priority is being proactive with the client, understanding the business needs and the technology needs, then solutioning it with the latest technologies. One of them is obviously Gen AI. And if you already have a standard industry and cross-industry solution that actually will accelerate implementation for the client, that can be a competitive advantage. I hope the competition is not listening to what I'm saying, right? That's our differentiation. I hope I'm not telling you too many things. But that's where we are focused on, Shilpa. And it's like a hike, like you said, right? It's one step at a time. We keep going, one deal at a time. The more you win, the more you learn, the more you can reuse for the new deals that are coming in. And the comfort of the client will be a lot more because you can actually demonstrate, you can walk the talk, really hike, not just talk about hiking. Yeah.
So one last question on GCCs. It's a follow-up to Rishabh's question. If you just look at the number
You can
of...
call me Srini.
Yeah, the number of BFSI GCCs coming to India, you know, the numbers have gone up significantly. Existing ones, Deutsche Bank, Lloyds, Wells Fargo, you name a bank, they're all hiring in hundreds and thousands. Just look at the number of centers that are being set up. So they are doing, you say you're partnering with them, it's BOT, GCCs in a box, you take a model, they're there. So do you see that as serious competition? They are chipping at your heels. IT companies are losing revenue because of GCCs. How do you see that evolving? What is your strategy beyond the BOT? Once you transfer it to them, they're on their own.
Yeah. See, one is the BOT opportunity that you talked about, Shilpa, but what happens is it also depends upon the objective of the clients. Okay, sometimes the clients make the GCCs as part of their global implementation, so the decision-making rights happen right here. There are some places where the decision rights actually happen out there, and the flow-through comes out here. So each GCC is different. Now coming to each of the segment, we have got some 1,400 to 1,500 GCCs right now. Every week, lot more, right? Haripriya is saying up and go, yeah. So yeah, they're adding so many per week. That's why I'm not, thank you Haripriya, that's why I'm not quoting how many per week. But if we are prepared to partner with them, not just on the BOT, but there are so many projects and it's not, the talent is there. And if you look at an organization like Wipro, like I talked about GenAI, we have trained 230,000 employees of Wipro. We have 44,000 advanced GenAI team. We have iAspire, which is a GenAI-based career advancement tool. So we have the talent and we can groom the talent. And GCCs and us can partner, helping them to execute projects. So I see that a win-win for both of us.
Samir, you can go next.
Hello, sir. Samir from ET. Just wanted to know from you, is the churn and restructuring over at Wipro and the company is all set for the growth plan? Second is, you spoke about the opportunity like vendor consolidation, cost takeout deals in energy sector. So can you throw some more color on that? And to Aparna, just one question is, can you give some color about the net cash situation in the company?
Okay. Number one, when I came in, for my first, Samir, I hope you can hear me, yeah? When I came in first, I want to repeat what I said. We called out 5 strategic priorities, and we're going to stay focused on that. I told you that I'll give you an update quarter on quarter, and I did this quarter, right? Number one. Number two, I said we're not going to change the structures. We're going to have 4 SMUs and 4 GBLs, and that has remained constant, and it will remain constant. However, I also said that leadership and people will continue to evolve. All I can promise you is that I'll stay on all these 3 factors, Samir. Okay? I'll leave it there. Now coming to vendor consolidation and cost reduction, right? I called out energy sector because based upon the opportunities that we see. Typically, cost reduction and vendor consolidation sometimes go hand in hand, and sometimes they are 2 parallel tracks. But when it comes to vendor consolidation, typically when the client sees us, so a couple of deals that I talked about, there has been vendor consolidation I clearly talked about. They want to leverage Wipro as a competitive advantage for them on their, not only on the operational efficiency, but their client experience. And we are bringing those technologies, tools, and GenAI and so on and so forth, right? So I'm seeing those opportunities coming in. So it's not a vendor consolidation just for the cost, but also for the operational efficiencies and experiences, and thereby getting a cost reduction. Some clients call it as cost transformation, right? But whatever said and done, at the end of the day, it is what it is, and I think you get it, Samir.
Aishwarya, would you like to go?
Now, net cash, our net cash is at about $4.3 billion. We have debt of about $1.9 billion. Yes, well, I don't know if it's highest ever, but it is reasonably, it's perhaps in the recent quarters it's a recent high, yes.
Aishwarya, you can go.
Evening, Srini. I'm Aishwarya from Business Line. Couple of questions. The margin growth has remained flat. When do you expect this to improve? And what other tailwinds do you have?
Can you repeat your last question?
Could you repeat the first Could you repeat the first question, Aishwarya?
Yeah.
Margin
The-
growth?
Has remained flat.
As flat.
Yes.
Okay.
When do you expect it to improve and the tailwinds?
I'll request Aparna to answer that question.
Right.
So our margins have been consistently improving, actually. So I'm not sure why you're saying our margin growth has been flat. If you look at it, we were 16.1% same time last year, and right now it's 16.8%. And like I said, our operating profits have also grown on a year-on-year basis at 11.2%, and our net income has grown 21.3%. Did I get the question wrong? Yeah, so I think it's been a consistent improvement in our trajectory, like I said, 71 basis points year on year, and in fact on a backdrop of a really muted revenue environment. And our margin improvement this quarter is actually very encouraging because this is done after absorbing 1 month of salary increase and is fully operationally driven. So we are very, very encouraged to see our margin performance.
The tailwinds, but
Tailwinds for margins?
no, for the next quarter.
So we actually start Q3 with a couple of headwinds. We have furloughs, fewer working days that impacts our revenues. We also have 2 incremental months of salary increases that we will have to make up for. What we have said is we are confident of holding it in a narrow band despite these headwinds. Over a long term, we still have the same traditional levers that we usually talk of. We have to sustain the utilization and offshoring. We have a lot of good work to still be done in improving our fixed price productivity and pyramids. And also, there is one lever that we've been working on. It's paid off, but there is still, we think, an optimization of our G&A that we have done. So I do think that these are levers that are available in the short to medium term. Over a long term, of course, the improved revenue environment will also help in moving our margins up substantially.
Thank you.
Do we have any last questions? Ayanti, please go ahead, please.
Hi, just a small one in addition to what Shilpa
Could
had
you
asked
please
about.
mention your name?
Hi, Ayanti from Financial Express. Hi. Yeah, just an additional question to what Shilpa asked about the large deals. You said it's highest in the last 10 quarters, 1.5 billion. Is the growth largely from the BFSI sector and or any other color you want to give on that?
It's very secular across markets and across industries. The 2 examples I gave today, the top 2 deals, they're not from financial services.
Yeah, absolutely. I think the mic is not switched on.
Predictability in the high side. So because,
Sorry, Shilpa.
You'll have to use the mic.
There it
Yeah.
is.
So how do you build more predictability in your hike cycle? You moved from July to September, so it's all getting pushed out. So I just wanted to understand, because that will give employees the visibility on how they plan their careers, right? So I just want you, and also the number of promotions, can you call that out? And will the ESOP pool be expanded as a part of the allocation policy also going forward to reward high performers?
So I'll come on all 3 questions. First of all, I think it's important. You're right that we must have predictability. Unfortunately, last year was a unique business cycle, and hence we had to take delayed. But as you heard, in a tough environment, we continued to do it in a 9-month period. So it's not that we spend 1 full year and wait for 1 year and before we get the salary increase. But this will be a norm now. So September is the norm for us to look at a cycle going forward. On promotions, we have continued to do our promotions irrespective.
Lighter note, Saurabh, thank you. Before the holiday season.
On the promotions, we did it across the entire period, even in a tough cycle, every quarter. And that's happening as planned. I don't have the exact numbers right now, but it's a normal process which is happening every quarter. So that's going on. The senior bands happen once a quarter, and that also happened, which we had called out to you. On the ESOP and the allocation policy, she's working on the allocation policy for shareholders, not for the employees. We'll have to work on that. But principally, our philosophy on equity has been very different. It is about few at the top and more deep, and for us, it is more cash. So that's how we have done it over the years. I don't think so. We're looking at any changing that policy per se on this one.
Can we take the question from Jyoti? You can pass the mic to her.
Hi, I'm Jyoti from Business Line. So, with US Feds cutting rate, do you think that you will be seeing better budgets for the next FY?
Jyoti, very difficult to predict of how the Fed behaves, how the rates behave, how the inflation behaves, how the geopolitical behave, and the big elephant in the room is the elections, right? So I'm not a financial analyst, but all, like I said, I see good momentum.
Right. Thank you, everyone. We will have to conclude our Q2 FY25 earnings press conference. For any follow-up questions, please reach out to the media relations team. We'll be very happy to help you. Thank you, and we'll see you soon.